how do you know when you're in the best financial position to buy your first home? Welcome to another episode of Real Estate 101 with G2 Realty Group. So if you're someone that's looking to buy your home in the next 6 to 8 months, you of course are going to want to talk to your financial advisor and your lender to prepare. But in today's video, we're going to talk about a couple of things that you're going to want to consider before you take that first step. So when you speak with a lender, they are going to be assessing 4 major areas of your financial health. They are going to be looking at credit, income, assets, and debt. Now that you know what the lenders are looking at, you can start to focus on which areas you really want to optimize and improve. So, quick disclaimer, you are obviously going to want to speak with your financial advisor and your lender before you make any big purchase. So, with that out of the way, let's get into it. Let's start with building your credit. So, you want your FICO to be at least 620, but ideally higher so you can get good interest rates. So what are some things that you can do to start improving your credit score? The first thing is that you can use credit cards to start making the small monthly payments that you have. These are things like your phone bill, maybe utility bills. Put them on the credit card and pay them off at the end of the month. This is going to start to help you build that credit. Another key thing with credit is you want to make sure that you keep your credit utilization at 30% or below. For example, if you have a $1,000 credit card limit, you don't want to spend more than $300 on it. Another tip that we have is utilizing free credit monitoring tools like Credit Karma. This is going to give you information on your credit score and can also give you reminders to pay bills and things like that to help you stay on top of your finances. The last thing that we wanted to mention about working on your credit is that when you start taking steps to improve your credit, it's not going to be an immediate change. You can expect about 3 to 6 months to start seeing an improvement. So if you're about 6 to 8 months from buying your first property, now is the perfect time to start taking some action to start boosting your scores now. So what goes hand in hand with credit is debt. So the other thing that lenders are going to be looking at is your debt to income ratio. And they want to make sure that it's at least 40% or below. Reducing your debt is also going to help with your credit. So this is how it kind of works hand in hand. A couple of methods that you can use for paying off your debt is one technique. It's called the avalanche method. And the avalanche method essentially is paying off your debts with the highest interest rate first. Alternatively, there's something called the Snowball Method, which tackles the debts with the lowest balance first. So again, you're going to want to speak with your financial advisor or your lender to figure out which option is best for you, but just kind of want to give you the information that these are 2 techniques that you consider when paying off debt. So let's talk about saving money and assets. So lenders want to make sure that you have enough money in the bank to cover a few things. The first is closing costs, the second is down payment, and the third is 3 months of reserves to cover your principal, interest, taxes, and insurance. So we hope that these tips were helpful for you and putting you in a prime position to purchase your first property. If you have any questions about lending or mortgage, check out our preferred lender here. And if you haven't already, please be sure to subscribe. Thank you guys so much for watching, and we'll catch you in the next one.